For WPP, which you are the CEO and co-founder of, and for your clients, is it better to have a hard Brexit fast or a somewhat softer Brexit later?
I would say soft fast would be my answer.
But I didn't give you that option.
But no, well, that's the option I'm taking. No, what you've just gone through is just increased uncertainty, isn't it? I mean, I assume the vote will pass today, will trigger Article 50, and then we'll have 2 years of tough negotiation. You were referring to an article in the FT about the difference between Mark Carney's attitude and Draghi's attitude at the ECB. That's just emblematic of the uncertainty that we have the next 2 years. And basically, if we look at the environment, very little growth. I mean, growth is around 3.5–4% nominal GDP growth worldwide. Very little inflation, although we'll get more inflation here if Trumponomics succeeds and we get infrastructure spending and sort of Keynesian boom over the next 2 or 3 years in the US, maybe some inflation in the UK, but basically very little inflation worldwide, very little pricing power, and then a focus on costs. I mean, what we're seeing at the moment is most corporate earnings actually are not hitting the top line, but are hitting the bottom line, which indicates that people are putting in cost programs, short-term cost programs to achieve. I saw Jeffrey Sachs was on moaning about the lack of investment. I mean, when you look at capital investment figures and long-term investment figures, they're just not there. So this focus on the short term is the thing that dominates. And when you open your bulletin in the morning with this sort of long oration on what might happen over the next couple of years, and we don't know what's going to happen in the next couple of years, and we don't know whether the deal gets done, if the deal gets done, it gets approved, although we hear
You've got to plan a business with all that going on. I guess
well,
trying to figure out
okay, so the plan is
the question.
Yes, you have to do two things. You have to, as far as we're concerned.
Yeah.
One is, the 4 EU markets, Germany, France, Italy, and Spain, are in our top 10. We can't ignore them. EU is a major source of business for us. Can't ignore them. So you have to do more of that. And at the same time, you have to do more of BRICS and Next 11, because the UK is trying to do bilateral trade agreements, not just with the US, but with China. I see Theresa May is now going to go to China because it's suggested the Chinese are worried about us cozying up to the Americans. We'll want to do stuff with India. We'll want to do stuff with Brazil. So all these bilateral agreements will become increasingly important.
What have you told officials so far?
What have I told?
Yeah.
Nothing. They don't listen to me.
Have they reached out to you?
They have actually, yes. Yeah. They've asked us for a view. The view I've given is pretty much what I've given you there, which is what business wants is reduced uncertainty, limited uncertainty. How do you run a business when every time you wake up in the morning and you listen to stuff on Bloomberg like this?
On the flip side, now they're getting higher wages, right? We saw January wages for salaries up the most in 9 months.
Little
is that
bit.
starting? Are you seeing that start to really feed in?
No. I think for the last 10 years, really, ever since Lehman, and people have become used to fixed compensation remaining pretty stable, increasing a little bit. Maybe inflation rates are low. Incentive compensation on the basis of performance, yes, that's been significant increases, but not base. No, I would say in our planning for 2017, salary budgets around the 3% increase level worldwide. I mean, that includes Latin America at high inflation rates in countries like Brazil and Argentina. So I would say no, we haven't seen increases in wage inflation to significant degrees, and labour shortages to significant degrees. Obviously, labour issues, whether it be travel bans in the US or whether it be concern about free movement or lack of free movement in the EU. We have 17,000 people in the UK out of 200,000 worldwide and 113 countries. And 17% of those 17,000 are EU citizens, so they are worried about whether they will continue to have UK citizenship, and vice versa. The UK citizens are sitting in Europe.
And I ask because I feel like the playbook of the last 10 years for executives was you got to read everything that the Fed chair says and everything that the head of the BOE is going to say in terms of raising rates and stimulus. Are you not doing that anymore? I mean, instead you check your Twitter account for what's going on here in the US, and did you wake up and look at the Brexit headlines?
No, the playbook, as you put it, is since Lehman, so since 2009. There was the snapback in 10. 11, 12, 13, 14, 15, 16 have been moderate growth, very little inflation, and lack of pricing power and focus on cost. I mean, that's basically it. And you see it particularly with the package goods companies. You look at the results of the package goods companies for the last quarter of 2016, it's really emblematic of that. I mean, you read through all of them. There's very, very little pricing, there's a little bit of pricing power, particularly in places like Latin America, but beyond that, very limited, and therefore there's this sort of grinding it out. And I think listening to what you're saying and listening to what others are saying, there's going to continue to be that situation in 17 and 18. In the UK, I have to say our budgets for the UK for this year are better than I anticipated, post, on June the 23rd or whatever it was when I was sitting in Cannes with the Secretary General and 5 other holding company heads talking about the Secretary General's development goals, and bang, we got the Brexit decisions. I was a little bit gloomy about that, but have to say that so far, so good. Having said that, the next 2 years are going to be very uncertain.
So you have Brexit uncertainty. To use your word, you have Trumponomics uncertainty. As you talk to your clients, which one weighs more heavily in their decisions right now?
Well, Trumponomics is good for the US in the short term. I mean, goodness knows, you give up forecasting after Brexit and Trump results. But looking at it in the next 2 or 3 years in the US, I would anticipate stronger US growth. So what you gain on the US swings, you lose on the international roundabouts, because it's all bets off internationally. I mean, what is going to happen in terms of relationships with China? What is going to happen with relationships with Mexico? What is going to happen in terms of relationships with Europe? Even the UK. I mean, the president's visit to the UK will be an interesting occasion. I'm sure it will stimulate some emotions.
But are companies and markets over-anticipating Trump at this point, given we've seen a couple of stumbles?
You mean in terms of the US?
Whether they can get done what they said they want to get done.
Well, you see it in relation to what's going on in Congress now. Elizabeth Warren. I mean, the Democrats are certainly, by their actions, are signaling they're frustrated that they have a lack of a power base that gives them an opportunity to stop things that the Republicans want. So I would say maybe it's not misplaced. We have to see what comes through, because there is a considerable amount of disagreement as to what those ultimate measures will be. Or put another way, if, for example, you repatriate all those earnings that are overseas, what is going to be more dividends and buybacks? Or is it going to be true long-term investment?
CapEx, yeah.
Yeah.
That's the question.
Long-term capital investment.
Exactly.